All right. Good morning, fellow traders, and welcome to today's live trading session. As you know, today is April 20th, 2022, and what we're going to do is look for some day trading setups first, based on a momentum strategy that we typically like to apply, and then after that, we're going to talk about what's happening fundamentally in the market as far as intermarket analysis. We may look at things like interest rates and geopolitical issues and all that good stuff in order to know how price may move. And then after that, we're going to do some top-down analysis like we typically do every single session. So again, move forward. I hope this is very helpful for many of you. And here we go. So let's talk about this first pair that we see in front of us right now. And before I move forward, let me just say, make sure your mic is mute. And if you do have something that you may want to share, if you have a question, you can unmute your mic and ask your question. But I guess we can move on. So, all right. So right now we're looking at this NZD, USD, or the Kiwi US dollar. We're currently looking at the 1 hour chart. And let me ask you this question. If you were to trade this particular setup, well, for one, let me ask you this question. What type of environment are we in based on what we see on the 1 hour? Are we in a bullish environment or a bearish environment? Let me ask you guys that quick question. Just to see, where you guys are at. And I know some of you guys has been with us for a while. You may know exactly what market environment this particular currency pair is in, but it's pretty obvious if you look at a few things. So I know Rob mentioned that we're in a bullish environment. So if we're in a bullish environment, will we be looking to buy or sell? So then that's the next question I'm going to ask. It's simple questions, because oftentimes trading is a lot more simpler than we think. The hardest part is really our emotional side, our psychological side. So Greg chimed in and he said buy. We want to buy NZD USD. We want to buy Kiwi US dollar. And that's what we want to do based on what we're seeing right now. Now, this is only based on the 1 hour time frame. That buy setup is primarily based on analysis that we see on this particular time frame, but it doesn't mean that we should look to buy. So then there's a few things we have to pay attention to first. And the first thing that we typically look at before we do anything, before we do any other analysis, is whether or not there is directional confluence. What we have to see is if there's multiple time frames that support a directional bias to the upside. In other words, we need to see multiple time frames supporting a bullish bias. So then what we typically want to do is move up from here. We're already on a 1 hour. We want to check the 4 hour chart and we want to check the daily chart to see if those are also in a bullish environment as well. And all we need to see is one more in a bullish environment to really be confident in this position. So then we see that the NZD USD or the Kiwi USD is bullish. Let's go up to the 4 hour chart. Okay, so we see here that the Kiwi USD is what? I know some of you guys could see it. Is this one bullish or bearish? And I want to ask you another question too after this, because I think this is very important to sort of give credence to our bullish bias. But let me ask you guys this one right here. What do you see right here? What type of pattern, or what do you see right here that could support a bullish bias? Let me ask you guys that question first, because I think that's can pretty much give you a clue on what side of the market we may need to be on for now. So I'll give you guys a few seconds to chime in. Remember, this is on a 4 hour chart. We're looking at price action on the 4 hour chart, and Rob mentioned that we see a double bottom or a W pattern, and that's exactly what we see. We see, of course, left bottom, price comes up, retest the lows, right bottom, and then it pushes up and it breaks above this neckline right there. So then on a 4 hour chart, we're in a bullish environment, just because of that. because we see that reversal pattern, that classical chart pattern, that infamous double bottom W pattern, and a break to the upside. We're in a bullish environment. Momentum is to the upside. So then we want to stay on that side of the market. So then we have the 1 hour with a bullish environment. We have the 4 hour with a bullish environment. Let us see how the daily chart is. Most likely the daily is still looking bearish, and that is exactly what we see. We see a bearish environment on the daily chart, but what we can do in advance, if you want to, because this market environment is still legit, even on the daily chart. We could see price correct up into this area of structure right here, and see price slide to the downside. There's a very good possibility we could see something like that. But for now, what we want to do is look for an opportunity to buy this on a dip in price. So the next thing we have to ask ourselves is, where is the key structural levels? And all we have to do is look left, because structure leaves clues. And if you look to the left historically, we see this congestion area right here. We see this area of pause right around here. So then what I'm going to do, I'm going to just identify a zone, and I'm going to take it from, but let me do this. Okay, right in the middle of this congestion area right here. Let me change the color because I don't want it to be green. Let's make this yellow. All the way down to where this neckline is, right around here, maybe a little bit below that, right around, let's do 67.60, right around here. So then somewhere within this zone is where we think price could go. So what I'm going to do is draw in a box to support this area right here. And let me change the color because I don't want it to be that color. We can keep it this color for now. But what we're going to look for, we're going to look for price to correct right back down into this area, retest this area, and then from there we'll look to buy on bullish confirmation. And there's a number of ways you can look to buy. For one, I like this. Once price reaches this area, as far as target goes, what we can do, we can either target the height of this double bottom. Usually that's a good idea. And if you do that, take us somewhere up here, which coincides to, structure to the left. Look left, structure leaves clues. We definitely have to pay attention to structure in this particular area right here. So then this is a good area to close out our trade if we do decide to enter this particular buy. So again, we'll just wait for price to come into the zone, test this area as support, and then look for a buy. Also, one thing I want to point out, even if we look for this entire move right here to the upside, we treat this as one impulse. What we can see from here all the way up to here is that we have our 50% fib right here and our 38.2 right here. So then, this trade would go somewhere near this zone, I believe, or within this particular zone between the 50 and the 38.2. But in our case, we're more so interested in price reaching this structure area. But what we're going to do from here, we're just going to place a few price alerts, and then we're going to see what happens with price. What I would like to see is price get near this structure area. So then what I'm going to do is place a price alert right here, add alert, and I'm going to put the date. The date is, I believe it's the 20th, I believe. So we're going to say price testing or near price testing or near structure support. And let me do 1 hour. 1 hour. And then I'm going to say look to buy on bull confirm, because that's what we want to do. We want to typically look to buy on bullish confirmation. So again, We're going to wait for price to come into this zone or get close to this when we will be alerted a little bit before then, and then we're going to look to buy, and then we could target this area up here, you know, right around 68.10, you could say, or 68.05, a little bit above the institutional level. If you want to play it safe, then just simply target the institutional level of 6,800 right here. That's if you want to be safe. You can just target that area, or you can just say, hey, let me just have two targets. One, you know, maybe right here, and another up here. You could do something like that and just simply have two targets, you know, just to play it safe. But yeah, this is the Kiwi USD. This is what we're looking for on the 1 hour time frame. I believe this will also bode well on also the 4 hour time frame. You know, you'll see pretty much the same levels respected even on the 4 hour right here. I know this doesn't have our zone. Let me include this right here. Let me make sure this is visible on the 4 hour time frame, and we could move on from there. But yeah, I believe this is in the same zone, the same area right here where this neckline is. So then, you know, we're pretty good in either case. But yeah, we'll be waiting for price to retrace down to that zone, and hopefully we get that. If not, then you know, it's okay. We're not going to be able to get involved in every trade because sometimes price doesn't pull back deep enough to give us the opportunity to involve ourselves in the trade. So, you know, if that happens, then just move on. Don't get frustrated. That's a part of trading. So yeah, I want to pass the mic over to Marvin. I know he has something that he may want to add. Yeah, I just want to say this real briefly. I know we're going to talk about the fundamental analysis a little bit later on, but I kind of want to mention about how there's some underlying themes that could actually help support this buy in Kiwi USD. And for one, we know if we continue to see this inflation narrative pick up, if we continue to see inflation peak or move to the upside, that's going to be supportive for the Kiwi or the New Zealand dollar, which is really a commodity linked currency. It's connected with the softer commodities. So one thing you got to keep in mind is that both central banks, both the Reserve Bank of New Zealand and the Federal Reserve Bank, they're both tightening. And we know that the RBNZ, the New Zealand, you know, the Reserve Bank of New Zealand was one of the first, along with Canada, to actually hike their rates and tighten. I think the last time, like, I think it was on even April 13th or sometime last week or a few weeks ago, they raised their OCR, their official cash rate, by 50 basis points. So they were one of the first to really tighten aggressively and move their interest rate, hike their interest rate to help curb off inflation. So then that's going to be supportive for the New Zealand dollar, but also that whole inflation narrative. When we see inflation pick up globally, that's going to be supportive for the Kiwi USD. So then right now we're looking just for a technical reason to execute this buy. We don't just want to jump in on an already moving train and buy the pair. We want to wait for a significant pullback towards structure and look for our opportunity to buy on bullish confirmation. We don't just simply buy once it enters this zone right here. We wait for certain things. We wait for certain signs, certain things technically on our chart to indicate that there's a rotation higher. So, and then we're going to look to target these two areas right here, these two zones right here, or take profit targets. So, yeah, I just kind of wanted to interject with that, just about how there's some underlying themes that's supporting the lift in Kiwi USD. Yeah. So yeah, we'll see what happens, but yeah, this is a particular setup that we'll be keeping our eye on, and hopefully it works out. If not, then all is good. But yeah. All right. So I guess if we don't have any questions about Kiwi USD, I guess we can move on. I'm assuming we don't have any questions. If you do, you can ask a question now, but if not, then we can move on to the next setup, which, you know, there is some level of ambiguity with this particular setup, but I'm going to use it as a teaching example of how you really need to trade with this next setup, this next pair that we're going to talk about. Okay, so I don't think we have any questions. So yeah, we can move on to this next pair. and is one of our major pairs, is one of the more popular pairs. We don't really talk about this as often as we used to right now. That's in regards to this currency pair, but it's the US dollar versus Japanese yen. And let's go there now. USD. Oops. Okay, let me do USD JPY. USD versus Japanese yen. All right. So right now we're looking at this particular pair, the US dollar, Japanese yen. We're currently looking at this from the 1 hour perspective. And based off of what we see on the 1 hour, what type of environment are we in? Based on what we see on the 1 hour. So I'll give you guys a chance. Are we in a bullish or bearish environment? Let me ask you that, guys, that question. Are we bullish or bearish? And I'll give you guys a few seconds to chime in. Okay, so Adam said we're bearish, right? And we are. We see that price did this move right here. It made a lower low, then price pushed up, made a lower high, and then we made a lower low again. But not just that, but we also have the 20 simple moving average sloping down. And whenever you see that in conjunction with price action making lower lows, lower highs, then we're in a bearish environment. But before we could support that bearish decision, we need to see if there is directional confluence, if multiple time frames support a bias or move to the downside, because there's a possibility that we may not see that. And like I said before, this pair carries a level of ambiguity with it where you have to make judgments. And this is a perfect, really, example of how you should trade, because when you're trading, you should always use an if then syntax. In other words, if this happens, then do this. But if this happens, then do this. That's how you need to trade. That's how you should always look to trade, because the market sometimes doesn't do what we're expecting it to do. We have to be fluid. We have to adapt to whatever price is giving us at the moment. So then 1 hour, we see that is a bearish environment. What about the 4 hour? Let's drop down to the 4 hour. 4 hour, is this bullish or bearish? Or is this bearish? Let me ask you guys this question. Yes or no? Or is it bullish? Is there a bias to the upside or a bias to the downside? Okay, yep. Stuart said no, right? Stuart said no. This does not have a bearish bias. The market environment is bullish. We see a bias or momentum to the upside. So that's different than what we saw on the 1 hour, right? Exactly. So let's move up. Let's see about the daily. Okay. Does the daily have a bullish or bearish environment? I'll give you guys a few seconds to chime in. This is pretty obvious, but yeah, well, I'm not going to insult your intelligence. I think you guys know. It's pretty much bullish. It's very much bullish. So this is different than what we saw on the 1 hour time frame, which should give us some cause to pause and just look and maybe say, hey, we could still see more upside on this particular pair, US dollar, Japanese yen. So then when we drop down to the 1 hour time frame, this is when we have to use an if then syntax, or if this happens, then do this. So then let's drop down to the 1 hour. Okay, so on the 1 hour, we know that we have this bearish market environment, bearish price action, you could say. But we're going to wait for a few things. So then for starters, what we're going to do, we're going to see how price responds around this area right here, this key area right here. That's what we want to see. We want to see how price, responds to this structure, because there's going to be one or two things happen. For one, price will either push up here and then respect this area of structure and then slide down, or price could do this: push up, break, and close above this level. And if that happens, then we can just wait for the retest of the structure. What was once resistance becomes support, and then we'll look to buy right around here and trade this upside in the direction of that momentum. Because as you guys know, the yen has been massively selling off, and it's due to the BOJ, Bank of Japan, and their monetary policy and how they're doing things over there. So then that's the reason why we've been seeing this massive sell-off in yen. And really for like the past few weeks, you could have just had the notion or the idea of just selling the yen, selling or really buying most yen pairs. You could have had that type of bias, and you would have made a lot of money. But for now, we don't know. It can either respect this structure, or it could break above it. But with the way our bias, our other time frames are hinting to, we're still in a bullish environment. So it's safe just to wait and see how price responds around here before we decide to do anything. But let me just draw this in with arrows, make this a little bit easier to read. So then, first example, boom, boom. And then if we do see that, then we can enter a short down here. However, there's a possibility that that price could break to the upside. There's a possibility that price could break to the upside. And if that does happen, we'll look for a buy and then a push to the upside. So then, there's two trade setups that could potentially happen. There's a plan A and a plan B. Plan B or plan A, price comes up, respects this area, and then we see a set. But plan B is if it breaks above this area and we look for a buy. So then I'm going to put like a buy arrow right here. Let me delete that last one. A buy right there. And let me do a sell as well. Let me get that going. So then there's a possibility we can see a sell as well. But we have to wait for price to give us clues on what it wants to do. So right now we're unclear on what price may want to do. But what we're going to do is wait for price to give us a clue, because we don't want to assume anything. We want price to sort of tell us what it wants to do. But we'll see. I know right now the US dollar's been selling off, so then that's the reason why we see this deeper correction, you could say, on US dollar Japanese yen. But there's a possibility that there could still be more upside with this particular pair. Yeah, like for this one with US dollar Japanese yen, it's an interesting one because it was already pretty overbought and at a point of exhaustion. And just like my brother said, like for the past few weeks, the yen has been weakening across the board, and especially in connection with or in its relationship to the US dollar. Just on widening spread differentials, widening, policy divergences between both the Fed and the Bank of Japan. Because while the Fed is moving in the direction of tightening their monetary policy or raising interest rates and reducing their balance sheet, the Bank of Japan is doing something completely different. They're choosing to remain accommodative, which is they want to keep their interest rate lower in negative territory. They're not concerned about some of the inflation concerns that most of the world is concerned about. But that's pretty much how Japan has been with Abenomics. It's been pretty much maintaining this position of being like a funding currency or a currency that helps finance the carry trade. So then we see that the yen, Japanese yen, was weakening just, I mean, a lot, just like Mev said, across the board. And of course, it was being underpinned by inflation expectations, by growth expectations, and even what we see happening in US Treasury yields help to underpin this pair. So then with that being said, since there was such conviction in US dollar Japanese yen, we want to wait for further confirmation. We don't want to assume that it's reversing yet. We don't want to assume that this bullish trend is over yet, because it could simply be transitory. It could just simply be just temporary, just for the moment. Because just like Melvin said, we know that for today the dollar is softening and weakening, but also there's rumors and talks that the Bank of Japan may have also intervened. We know they've intervened verbally to help slow down the weakening of the Japanese yen, but could they have intervened with monetary policy to do it as well, because they're concerned about the Japanese yen just weakening to such a degree that it will actually slow growth and help make life harder for a lot of their residents there. So then we know last night that they intervened in the bond market, and I may touch on that. There's just so many things to touch on. I may touch on how they intervened with unlimited bond buying to keep their 10-year JGB's yield low. The Japanese government bond yield, the 10-year bond yield, they want to keep it capped at 0.25%. So if it moves beyond that, they're going to engage in unlimited bond buying to help keep the rates low. So then we know they're engaging in some type of yield curve control. But as far as with the actual rate of the Japanese yen currency, where it is in comparison to other currencies, most likely they're going to have to intervene to sort of slow down the constant weakening. Because as long as the Bank of Japan keeps their interest rate low, there's going that it's going to weaken on policy divergence alone, and widening rate spreads or rate differentials. So then this is something to look into. But for the US dollar Japanese yen, we're going to wait for confirmation. We got a plan A and a plan B. We don't want to just pull the trigger immediately. We want to wait for the market to sort of clue us in on what's taking place in this particular yen cross. So yeah. All right. So yeah, do we have any questions in regards to this particular setup before we move to the next one? I believe I may do one more before we transition to the next part of our meeting. Um, so I'll wait. Going once, da-doom, da-doom, going twice, da-doom, da-doom. All right. So yeah, I guess there aren't any questions, so I guess we can move forward. We can talk about this next currency pair, and I got a few more, but if we have time later on, I may give them to you near the end when we do the top-down analysis stuff. But for now, we're going to just talk about this next one, which is I don't even know if I cleared the chart on this one, but let's see. The pound Kiwi, GBP, NZD, pound Kiwi, and we're currently looking at the 1 hour chart as always. So as you guys can see, price has been in a period of consolidation for a while. Created the double top, and went down, and all this other craziness right here, and it broke this area of structure, this low right here, to the downside. Now we're retracing up. So we're in a bearish environment right now. It's pretty obvious, and we're going to look for an opportunity to sell this on a correction in price. But what do we have to do before we do anything? It's that one word. We say it all the time when we do these momentum setups. But as a matter of fact, I know we have a few people that are new. But if anyone wants to add that word to the group chat, you can. If not, then I'll add it. As a matter of fact, I'll add it. Let me just add it. But the next step we want to do is called directional confluence. Directional confluence. Okay. So yeah, let me know if you guys see that on your end. Directional confluence. Yep. Joe said confluence. Yep. Directional confluence. That's what we need to see right now, as far as what side of the market we need to be on. It's called directional confluence. That's a phrase that we coined, because confluence can mean a number of things. It could be a confluence with levels, structure, all that stuff. But we're talking about directionality. So then, we coined this frame directional confluence to give an idea of when certain time frames have an agreement as far as directional buys goes. So what we want to do from here, we want to move on to the 4 hour. We already know that the 1 hour is bearish. Let's go to the 4 hour. Okay, the 4 hour, is this bullish or bearish or neutral? Let me ask you guys that question. Bullish, bearish, neutral? Well, okay, I know Adam said neutral, and yeah, there's a reason why he said neutral, and of course, it makes perfect sense. We do see what appears to be consolidation, but I want to say neutral, but more slightly bearish. I believe it's in a period of transition right now, and you never know. By the time the 8 o'clock hour comes, or the next 30 minutes, we may see this environment change, and it may look bearish instead of neutral or flat. But I'm leaning towards slightly bearish, so I'm going to go with that for now. But one thing I want to point out is that, you know, right here we do see this bottoming right here. What pattern do we see right here? For those who are familiar, what pattern is it that we see right around here? Right there. What classical pattern do we see there? And well, I guess for this, really, there's two labels you can use, or two phrases. I know Stuart said inverted head and shoulders, left shoulder, head, and right shoulder. But we also have something that we like to call a higher high and higher low, because the price pushed up, created a higher high because it broke above this high right here. And then we have a higher low forming right here, and then price exploded to the upside. So then in either case, however you identify it, you know, it doesn't matter. What we see here is a bullish reversal pattern. So we see price push and expand to the upside, but it found resistance where? Right at this area of structure right here. So from there, price started consolidating. And I believe this is a daily structure level. I do believe that this could be daily structure up here. But from here, we see that price started relaxing and consolidating. And you know, I do believe we could see another push to the upside, but we never know. We never really know. But anyways, this is the 4 hour. And what do we have on the daily? I believe the daily should still be somewhat bullish, and it is. The daily is bullish. So this could be sort of risky, but like I said before, this is what we call daily structure resistance. Look left, structure leads clues. That's the reason why we see price responding to this area. But if you want to play it safe, you can just trade this as a 4 hour topping setup and wait for price maybe to break this low. But I do believe we did see some sort of a breakdown right here. If we draw this in right here, we have this ascending trend line, and we can clone this line. Okay, let me go to the 1 hour. All right, let's go 15. Okay, we don't see it for some reason. Okay, let me try one more time. Clone. Okay, for some reason we're not seeing this line come through. Let me do something. I don't know why it's not coming through, but you know, we should see. Let me do it from this time frame. Okay, yeah, for some reason we're having issues, but you know what you can do, you can drag this up to here, up to these highs, and you can see that price is creating what we would call an ascending channel. And you know, we just had the break to the upside, so you know, we're expecting price to possibly correct up into this area, and then look for our selling opportunity. So you know, we see that, and like we said before, whenever price does this, for those who's been with us for a while, we see the strong rally to the upside, right? And then all of a sudden we see price move this way. What does that give us a clue of? I know you guys has been, you know, some of you guys have been with us for a while, you may know, but others, this may be new, but you may still know what this means. But what does this say about price? Yep. Okay, Adam said slowing momentum. Yep. Momentum is waning. Momentum is weakening. So then that's what we see right here with this particular pair. So then what we want to do, we want to stay on the side of selling, since we did get a break of this channel to the downside. And what we need to do right now is look for bearish, a pullback and a retest of structure, and bearish confirmation from there. So then let me ask you guys this question. What I know we want to look at an area of resistance. Remember what we always say. We want to buy at support, sell at resistance. So then if we are looking to sell, we would want to sell at resistance. So then in this case, where is resistance, or where could you identify potential resistance at? So I'll give you guys a second to chime in, but it's not as hard as you may think. But I'll give you guys a second to chime in. The most obvious one is the trend line, right? What was once support could become resistance, right? There's a possibility that price may correct higher and retest that trend line. But what else do we see? And I know we mentioned this in one of our free sessions, but yeah, Greg mentioned hidden structure or hidden resistance, and that is where we have this hesitation indecision candle right here. I don't know if you guys can see it. We can zoom in right here, but on this move lower, we see all these red candles, but sandwiched in between these red candles is this one green doji-like indecision candle right here. And this is what we call hidden structure right here. This is where we believe orders may be positioned to help push price to the downside. So then we may see quite a number of sell orders right here, and we may see price slide to the downside right when price gets to this particular area. But anyways, let's zoom out. And I know I'm on the 2-hour chart. I should have been on the 1 hour, but it doesn't really matter. It's all the same. Let's go to the 1 hour. Okay, so it's still in the same area of hesitation right here, but what we're going to look for is a potential opportunity to sell this on a pullback into the zone. So then let me draw in this zone, because we have structure to the left as well. Look left, structure leaves clues. We have structure, this area acted as support, and this right here, this right here, this right here, previous structure as well. So then we know in this area price may find some sellers right here. So then what we want to do is identify our zone based on those levels. So let's do this right now. Let's do from here all the way up to, we could do 92.80, right around here. So then from about 92.50, you could say, all the way to 92.80 is where we would look for an opportunity to sell. This is where we believe the sellers will come in and give us an opportunity to take advantage of this move to the downside. So then this is what we're going to do. We're going to simply wait for price to come to us. We're not going to chase trades. We're going to wait for price to correct into this zone right here, where we believe there should be sellers positioned here. And by the time it reaches this zone, we should see the 20 SMA in this zone. We should have some confluence, because as you guys know, the 20 simple moving average line can also act as dynamic resistance. So as soon as price reaches this area, then we want to look for a sell. And if you want to, you can of course target the lows. That's the most obvious, but then you can also look for the next available main target area, which is right around here, which would be somewhat risky. I don't know if I would do that myself, but you can if you want to. You could extend your target down to that level, but for me, I'm just looking to sell, get in and get out. I'll be looking well, maybe around 90, maybe 91.50, good area. Some people consider that a strong number level, but either the lows right here, this could be TP1, right around here. We have TP1 right here, and TP2 could be, somewhere down here, or you can just take a shorter target, because as you guys know, when it comes to finding our targets, we want to see how far price pulls back first, and then we typically use that to determine our target. So then right when we get the end of that correction, or that correction completes, then we can target this area right around here, 91, maybe 66. This area right here could be an area where we actually exit, but as of now we don't know. This could change. So we'll just see. In either case, what would happen. But yeah, we're looking to sell. As soon as price corrects up into the zone, we'll be looking for a sell opportunity. So then, of course, I'll keep you guys posted on what we decide to do. Price may reach this area and it may not. So then what I'm going to do, I'm going to do something. I'm going to drop down to a smaller time frame, like the 15-minute, to see what's going on. As a matter of fact, let me do this first. Let me draw my Fibonacci from here all the way down to here. And then I'm going to drop down to my 15-minute just to see what's going on. Okay, so this is the 15-minute time frame. Okay, let me drop down to maybe the 10. Let's see what's going on there. Okay, so then with the 10-minute, a number of things could be happening. Yeah, let me just do this. Let me identify the zone here to here, and let me move this for now. I know some of you guys that are new, you guys may not know what I'm doing, but we're just identifying where we believe price could go. So right now, I identified an area right around here that price may respect as a price reversal zone. So anywhere within this particular area is where price could actually go, and where we could see price rotate. So anywhere within this area is where price is. I mean, it's testing this area now, so it can happen now, but from here we want to see price slide lower and test this level, and then slide down and possibly test this level. But yeah, we're going to treat this level as the area where we expect sellers to come in at. So we'll see. We'll see what happens. Let me just remove this for now. And yeah, if you guys want to take a screenshot of this, you can, if you want to. And just simply wait for price to give you more clarity on what is taking place before you decide to get involved. But somewhere between 92.35 and 92.59 or 60 is where price could potentially go, and that coincides with structure right around here as well. Now this all could be quite interesting as far as what price really does, but we're just going to keep an eye on this. Hopefully we get I would like to see a deeper correction up into this zone, but sometimes we do not get that. And if we don't get that, then we could still look for a chance to sell based off of what we see on this 10-minute or 15-minute trigger time frame. So then if you are going to be in front of your chart, you can simply, this is just a simple way, even though it's a little bit more complex than this. If you wanted to, you can just simply wait for price to break this trend line, come to retest it, and then enter your sell. So in other words, something like this: break, retest, and then sell. And then you will have your stop loss above your highs right here, and you'll have in your targets. But we didn't see this yet, so then we don't have to include this for now. That's just to give you guys an idea of what the bearish confirmation would look like. But yeah. So oh yeah, Ryan, yeah. Tell Deuce we said hello as well. Yeah, tell him we said hello. Yeah, for those who may not know, Deuce is a very young trader. He's going to start learning this maybe sometime in the future, but he's in front of our monitor now listening to us, so we say hello to him as well.
Yeah, how old is he?
Yeah, but I think Deuce is about 6, right? Oh yeah, he's 5. He's 5 years old. Yep. A future trader. But yeah, we say hello to him as well. He hasn't been on these webinars in a while, but I'm glad to see that he's with us today. All right, so I guess that's it for the day trading setups. I think we did enough for now as far as day trading opportunities. Let's transition to our next portion of the webinar, where we talk about what's been happening fundamentally in the market because it's very important that you get an idea of why prices are moving the way they're moving. And it's not saying you have to be an expert in macroeconomics, but just if like even if you know just a little bit, it can help a lot in understanding why price is doing what it's doing. So I'm going to pass the mic over to Marvin, and he's going to go over that, and then we're going to do some top-down analysis and find some more setups, some high probability setups in the market. Yeah, so just like Melvin said, you don't have to be an expert. You don't have to have a PhD in macroeconomics or microeconomics or whatever, or in finances in general. But we still feel like it's important to sort of know some of the underlying themes or reasons behind why price is moving the way it does. I'm just going to go through this quickly and not just spend too much time because I know Melvin has a few more additional setups that he want to share with the group. But for today, and really in general, if we want to look at the market temperature or just the market conditions, we can't avoid looking at what's happening with the US dollar, what's happening with the greenback. So then what I want to do right now, I want to go to the Dixie. I think, yeah, Melvin, you have something you want to share? No, I said, yeah, I think it hit our zone for the QUSD, the zone we was looking at. So, but yeah,
Okay.
we'll come back to that later.
All right. Okay. Yeah. Yeah. Just yeah. We'll come back to that in a little bit. It's just one of the alerts went off, but this is the Dixie chart, and let me just go to the daily first, because I just want to point out something, just what we're seeing happening in the dollar after it's been in a surge for some time due to rising yields. We saw for the past few weeks, there's been rising interest rate expectations. We've been hearing the rhetoric, the talk from central banks. And actually, this morning, we have a slew of central bank speech coming out of Fed speech with a few central bank board members like Evans, and I can't remember who else, but there's a few of them that will be speaking this morning. And I'm pretty sure they're going to reinforce the hawkish tone in the Fed, which is their commitment to hike rates by 50 basis points, for the next session, or there's wiggle room for them to do that. But we can see here that with the US dollar, we can see that for today, the US dollar is pulling back. And this is a significant pullback. If you think about it, it almost completely pulled back 2 days worth of dollar activity. It almost pretty much covered, and it pulled back. That's how deep the pullback has been. So then when we look at the selling in the dollar, this type of significant profound move is going to actually impact market sentiment, but it's going to also impact dollar denominated assets, or just assets in general, because most traders don't realize that really most instruments, most financial instruments, most asset classes make their way through the dollar at some point. At some point, most of the financial transactions that take place in the currency market and stock trading in general, irregardless of whether you're trading a US based asset, it's going to make its way through the dollar, because the dollar is the world's reserve currency at the moment. And we know that things are definitely changing in the world or in the globe or in today's financial system. But at the moment, the US dollar is the world's reserve currency, and a lot of transactions take place. But what's interesting now that, is that despite the interest rate hike expectation, we're seeing what looks like a waning in expectations, or a waning. We're seeing dollar weakness, and we can't look at the dollar without looking at what's happening in yields or in rates, because that's really the chief story. Like for the past few months, we've been monitoring bond markets, we've been monitoring nominal yields and real yields to get an idea of what's happening in rate markets. So then we see this pullback in the US dollar. So let's see if we're seeing a pullback in yield. So then this is the dollar. So then what I'm going to do right now, let's go to the US. I'm just going to go to the US 2-year, because that's more reflective of interest rate hikes, immediate interest rate hikes, and the inflation story. So then, yeah, we did see it pull back some, but now it's getting ready to move back to the upside. It's moving in, positive territory. We're seeing that lift happen again. So then it did dip, it did pull back, but then now we're seeing that it's making its way up. So then that's with the US 2-year yield. which is interesting because I want to see what's happening with the yield curve for that. But let's go to the US 10-year as well. And we see that the US 10-year is softening, which is really more reflective of growth. And we're seeing this easing of sort of like growth expectations, or what could simply be a slowing of growth, which is impacting the dollar. We're seeing the dollar soften, but this is also going to underpin risk assets, especially those that are dollar denominated, or just like stocks. And just like certain other dollar denominated currency pairs, we're seeing them rally to the upside on this dollar weakness. But this dollar weakness is also probably underpinning assets like gold. Let me just pull up another column right here so we can just take a look at what's happening in gold. So then let's do XAU USD right here. And okay, so then this is the daily chart for gold, and we can see that gold is still pressured to the downside. We're still seeing some downside pressure, as rates are still high, but it seems as if right now gold is sort of maintaining a range, especially gold denominated in US dollars. We're seeing that it's maintaining a range. So then one thing we do know is that right now for this session, when you look at certain risk assets across the board, we're seeing this tone of buying of assets. Like if we go to let's say, okay, let's see this. Okay, did it freeze? Did your screen freeze? I don't know. Let's see. I know Ryan said that the screen may have freezed. Okay, I think it's okay on our end. But yeah, just if it keeps freezing, then you'll get the recording. So then you'll be able to look at it later. But let's go to the certain US futures, because it's important to kind of see what's happening in future markets. So then let's look here at the S&P E-mini futures. We can see that that's positive. That's moving to the upside. We're seeing a continuation of that positive handover from yesterday, when we saw it rally to the upside during the second half of the trading session. Let's see what's happening in the Dow futures, E-mini futures. And we're seeing the same thing, that it's actually positive day. It's starting to move to the upside. So then there's a possibility that we may see US equities open or gap higher in positive territory. Let's look at the Nasdaq, because that's definitely one we need to pay attention to, especially when considering the rising rate environment. So let's look at that. Okay, I know we got another alert, the Aussie alert. Okay, so let's, yeah, that's a little bit different. But yeah, we see that the Nasdaq 100, we see that that's also
que
trading
alguien
in
sé
positive territory as well.
y,
So then we're
y
seeing that US indices are
busca
actually, there's some
y dice, yo tengo
positive
un proyecto,
tailwind to these US indices,
mandé un
which
correo,
means
le
is
mandé
that,
un
that
correo PDF, un
possibly
correo donde yo le
this
dije
tone of
que
risk
estaba formando
appetite
parte del equipo
moving
de
into this session. We're
representar
seeing continuation of that same demand for risk assets, um,
2 semanas.
for today's session.
O sea,
And
la
I know
semana
someone has
pasada,
their mic on. If you can just mute your mic. Yeah,
correcto, hay dos tickets. O
yeah,
sea,
okay, yeah.
uno
But
que era el del usuario olfato.
yeah, okay. Yeah, I know for someone in the background, I know your mic is on. You can mute your mic for those that just joined in. But yeah, so then we're seeing this demand and risk assets. We're seeing US equities to the upside, moving to the upside. And this is interesting, especially in light of what came after hours during the post after hours trading. We saw a certain company, their earnings data came out. And for those of you guys that do pay attention to the earnings data, what earnings report came out that that sort of, I wouldn't say it's shocked, but it sent some interesting, yeah, okay, Netflix, exactly. So let's just look at that real quick. NFLX. Let's look at Netflix, because they did come out with their earnings data, and you can see right now that right now the market, pre-market, we're expecting to see a gap lower. This is about a 17% gap, I think, in its opening price. Let's see, from where it closed all the way down to where it's going to open. This is like a 27% drop, in its down to 250 from where it closed around 350. It's almost 100 point, a 100 point gap lower. So it's interesting that we're seeing U.S. indices trade to the upside, especially when we see what's happening with Netflix. We see that Netflix is definitely going to gap lower substantially on the back, or just due to a combination of a few things. For one, they lost over 200,000 subscribers during the first quarter, and some of those subscribers were actually from Russia, as many U.S. companies, Western companies, put sanctions on Russia. A part of them trying to censor or sanction Russia was that they pretty much forbid any Russians from having Netflix. So then, of course, they lost some subscribers there, but just in general, just with the price hike in Netflix, they lost just quite a number of the subscriber base, over 200,000 during the first quarter. But also, of course, this is the first earnings report where we saw a drop in revenues, where we saw that they ended up dropping. So then let's just pull up here. We can see that based on their earnings report, the top line data came out well with earnings per share. It came out at $3.53 when the estimate was for $2.90. So it performed fairly well on the top line, but the bottom line data with revenue, that's where we saw that underperformance. So then we saw that it fell short of its estimate by $61.352 million, and this is what actually helped to sort of place pressure on it. So it's the combination of loss of subscribers. It was also the revenue miss, but not only that, but even in their earnings call, they pretty much said that they're expecting future months down the line that they're going to lose more subscribers. So then, just that alone, the future estimates of more subscribers leaving Netflix, that also helped to exacerbate the sell-off, and we saw massive selling of it after hours yesterday. And you can see even in the pre-market trading, we're seeing some offers to sell Netflix. So it's interesting, what's going to happen. This is, I think, isn't Fang one of the Netflix is one of the Fang stocks, I'm thinking. So then, of course, it's interesting to see this take place on today. But you would think that that would have dragged all the indices down, but we're not seeing that. We're seeing U.S. future markets trade to the upside. So then, what I'm going to do real quick, just for the sake of time, I know there's a lot that I could cover, but let's go to the futures market, futures heat map right here. And as you can see, a lot of our instruments assets, especially in the futures market, is green. And what's really interesting is that we're seeing the VIX volatility. We're seeing the VIX futures go up along with a lot of our risk assets here, which is interesting because usually there's an inverse relationship. Usually you see a certain unique type of correlation or diversification out of the VIX whenever you see stocks move to the upside, but we're not witnessing that. So we're seeing some interesting capital flow for today's session. And this is not unusual. Like, really, to be honest with you, for the past few months, we've been seeing disjointed correlations or decoupling of correlations. And there's been times when assets will move to the upside. Like, you will either see bond market sell off and stock sell off, which is a traditional correlation that typically falls apart right now. And right now, for today, we're seeing VIX futures positive along with the U.S. indices. So this is an interesting type of scenario. But we see that a lot of our commodities are trading to the upside. Crude oil is moving back to the upside. We're seeing Natty, sell off. It was strong when crude oil was weakening, but we're seeing it pulled back some. But what's interesting is that you see a lot of our metals, our hard metals, precious metals, along with our base metals, selling off for today. And that could be really due to the US dollar strength. As the US dollar is weakening, well, the US dollar is weakening now. So yeah, this is not due to US dollar strength. Forgive me for that. But the US dollar is selling off. So it's interesting to see that even with these precious metals, usually when we see yields pull back, this would serve as a tailwind for precious metals. But it seems as if there's not as much demand, speculative interest in gold futures, silver futures, platinum, etc. But we can see here that it's an interesting trading session. One thing we do know is that the dollar is selling off in comparison to everything else, every other currency. But let's look at the Forex heat map right here. And we can see here that, the dollar is pretty much selling off. That's the weakest currency for today. And the strongest currency is the Kiwi, or the New Zealand dollar. It's receiving that lift from its tied to soft commodities. We know that soft commodities are rallying. And man, I wish I can talk about what's happening with milk, because milk is breaking into fresh highs, decade highs. So then, that's kind of helping to also underpin the Kiwi as well. But we see the New Zealand dollar, the Australian dollar, the Canadian dollar. All three of these are commodity linked currencies. The Aussie is tied to hard commodities. The CAD, or the loonie, is tied to oil. So we're seeing our commodity linked currencies actually gain to the upside, as we're seeing this rotation back into commodities as the inflation story and narrative continues to play out. As inflation expectations continue to pick up, that's going to always underpin these commodity linked currencies. But we see the three weakest is the euro, the Swiss franc, and the US dollar. So that's with traditional spot. So let's go into digital currencies right here, digital assets. So we can see here in the cryptocurrency market, we can see that the strongest currencies for today are Bitcoin Cash, Ethereum, and Bitcoin. They're moving to the upside, and that can also be underpinned by the US dollar weakness. We see that the US dollar is weak for today. So we're seeing that even play out there. But it's going to be an interesting day. The reason why it's going to be an interesting day is because there's just a lot of headline risk, just a lot going on, a lot happening geopolitically that we still got to keep our eye on. So we're just in an interesting type of trading environment. We're in uncharted territory in the financial realm, and it's going to be interesting to see how this all pans out over the next few months, as we see a combination of rising inflation. We're seeing signs of slowing growth. I know the IMF came out with their report on yesterday that they downgraded their growth forecast to like 3.6% global growth for 2022. So this news could actually, maybe that was the news that helped to spur the growth on yesterday, and actually helped to, I mean, not spur the growth, but spur the rally on yesterday with US stocks. And it can also be playing a part in today's stock market as well, that we may see stock markets, rally to the upside on that downgrade in growth, which is really kind of an oxymoron. It's not something we expect, but maybe the market could be interpreting the fact that we're seeing a slowing of growth that's going to restrain inflation. That's going to actually put the reins on inflation and help to restrain it somewhat, because inflation has been overheating and definitely moving to the upside. So even the talk of restraining inflation is helping to lift risk assets. But it's kind of hard to say that when we do see yields moving to the upside, like the US 2-year yield as well. So it's kind of hard to even say that. But one thing we do know, let me just move down to this right quick. We're seeing a pullback in some of our well, we see, of course, the market is pricing in an expectation of how many hikes for 2022. This is hike 5. I know I haven't updated this in a while, but 6 hikes, 7 hike, 8 hike, 9 hikes. So right now, where the Fed funds futures contracts are, and we're seeing a pricing in of about 9, rate hikes. Of course, this is all 25 basis points, increments. We know some of these would be 50 basis points, but this just lets us know how aggressive the Fed wants to be. So it's just going to be interesting. We're seeing still this aggressive interest rate hike expectation. That's going to always, put pressure on stock rally, stock gains, as we see financial conditions tighten some more. But one thing we do know is that there is demand. I think in an environment where we have this Tina type trading, where there is no other alternative asset, to invest in other than U.S. based assets. I think we're going to still see huge demand for U.S. equities, even throughout this period of uncertainty, where we're in this economic uncertainty, where we're seeing supply constraints make its way through the market, and we don't know how things are going to turn out around August. That's pretty much where everyone's focus and the eyes are on what's going to happen in August, because and right before the fall, because a lot of those supply constraints are going to make its way through the market, and we're going to really feel it. We're going to feel it in inflation, if there's not a quick answer, to this, but I think it's already definite what we're going to see. The handwriting is pretty much on the wall. But one thing we do know is that the Fed is going to definitely have to hike rates to help sort of offset a curb or soften the impact of what inflation will be doing to consumers and to people, just around the world. But yeah, I'm not going to keep you for too long because I know Melvin wants to cover a few more things. Man. So yeah, but I'm gonna actually move on and hand the mic back over to Melvin, and then we're gonna talk some more.
All right. So yeah, I guess we can look at these charts right now. I know we had an alert go off earlier, so then we can check that one right quick. Let's go to TV USD for one. I think let's go to the 1 hour and let's do NZD USD. All right. So yeah, it did hit our alert and then it started bouncing from there. So we'll see how this goes, but of course we're still overbought. You look at stochastics, but sometimes that doesn't mean anything. Let's see how things look on a trigger time frame. Let's go to the 15-minute, or let me just do the 10-minute. Let's see what's going on. Okay. So yeah, I mean, we really could see price push to the upside, but what I want to see is something like this. Based on Elliott wave theory, leg A, leg B, and leg C, maybe down into this zone. And then we can take advantage of this buy to the upside. But with the way this is bouncing now, um, price could very well push and break above this zone right here. Let me just draw this out so that we are testing structure right now. And price could very well break to the upside, pull back, and create a bullish environment. So in either case, if that is the case, then of course we would definitely not target a TP1. If you do see price break and pull back, then we'll just go for this main target up here, because that's where I think price will likely go. But as I said, I typically like to see a 3-wave pullback down to this area, but we'll see. Hopefully this levels holds, and then we get another opportunity for price to push to the downside. As a matter of fact, let's calculate where that would be right now, just to give that to you guys as well. So of course, let me I'll just start from here and let's try this right here, and let's do this right here. I'm just going to identify that price reversal zone, and yeah, right around here. So that's where I would like to see price go and retest this zone again. But as you guys know, anything can happen. The market can do what it wants to do. So we may see price expand to the upside, break, retest the highs, come back here, and then retest this as support. And then we can enter a buy on bullish confirmation from here and trade this to the upside. However, if price does respect this area, then we'll look to buy, right around, this area right here and trade this to the upside. So in either case, we're still bullish. We haven't changed our buys yet, but we may have to adjust how we approach this particular setup. So then what I want to do is this. Well, we'll come back to this. We'll come back to the Kiwi USD. Well, let me just do this just to have it here anyways. I'm just going to place a price alert right here. Let me change the color. And if we can get a break and close above this, then I know that, there's a possibility we may be in a bullish environment. But I'm expecting it to make another test of this zone again. So then we'll see what happens. But let's place a price alert, say crossing up, once per bar close. Bullish confirmation. If so, look to buy on retest. Oh yeah. All right. So we got our alert here, and we'll see. But I'm also going to place an alert down here, and we'll be notified when price reaches this area as well. So let me put the date. Price testing PRZ. That's price reversal zone on 10. Look to and we'll confirm. All right. But yeah. All right. So yeah, we'll see what happens. It looks like price is responding to this area structure right here. So then, we'll see somewhere in this area we could look to buy on bull confirmation. All right. So that was Kiwi USD. Another pair that we looked at was US dollar Japanese yen. Let's do that right now. US dollar Japanese yen. What do we see there? Well, we see price came and tested this area right here of resistance. Let's go to our 10-minute chart there, and we can pretty much do the same thing. Look for price to rally to a price reversal zone, and we may have to adjust this based on based on a number of things, because we don't know how deep this pullback is. But this is what we're looking for. We're expecting something like that. And one thing I want to say is that sometimes this does work, and sometimes it doesn't, as far as waiting for 3-wave pullbacks. But we typically want to do that based on Elliott wave theory. If there's one thing that Elliott was right about, it's that. The 3-wave pullback. But we'll be looking for a potential sell order right around this area. And as you guys already know, if price breaks above this area, we'll be looking to buy. So let me place a price alert right here. Add alert. April 20th. Price testing PRZ area on 10-minute. Look to sell on bear confirmed. All right, and in this trade, you definitely want to wait for bearish confirmation, because we don't know if price does push up into this area. Price could very well break to the upside. So then that's why bearish confirmation is key, especially on this pair, because we definitely need to see that. For those who may not know, bearish confirmation is this: if price pushes up into this area, we would like to see something like a reversal pattern, something like that, before we actually trade this lower. So that's the type of bearish confirmation that we look for. It could be somewhat more complex than that, but of course, the more you look at these charts, the more you get a feel for how that looks. So this is US dollar Japanese yen. Let's look at pound Kiwi before we look at a pair for top-down analysis. Okay, so then from pound Kiwi, we're already here. We're already in this zone right here. This is what we was looking for anyways. I believe on our 3-wave pullback. Yeah, we was looking for this anyways. So price is already there. So pretty soon, man. Wow. Yeah, this is looking kind of good. I may actually go in really soon. We do have this area right here. You know what? I'm going to go in with a small, tiny position. Let me see something. I wish he was probably here earlier, because I had to do all of this analysis now. But yeah, yeah, get in and yeah, I'm just gonna jump in right now. Stop at 92.56, you could say. Let me and I'm gonna go in small because you know you don't know we have a break of that level yet, but let me just go in. What's the stop loss? Okay, I got my stop at 1.9256, and you guys could do something around that area. All right, so yeah, just a little bit above this. You know, it's a bit early, it's a bit premature. You know, in all honesty, I probably should have waited for a break of this structure right around here, but I went in a bit early. So you know, we'll see what happens. But you know, go in small. For me, I risk 0.6%, so it won't really be a problem. Plus, as you guys know, we entered a trade last night that hit the target. I actually had two positions on, so you know, that went well. But yeah, if we could see price break this level, then we definitely have confirmation, and then we could look for a chance to you know, sell this on a retest and then trade this down. So I went in a little bit early. If you guys want to, you can wait until price breaks 1.9221 or you know 1.92214. You can wait for that if you want, and then if you get a break and close below this level on the 10-minute, then you can look for your chance to sell, which is, you know, in all honesty, looking at this now, that's probably what I should have done. I didn't see things clearly. I should have waited for price to break this level first before we actually look to sell. But I'm going to hold to this trade. If it, you know, if we get stopped out, then it's fine. I'll still look for another opportunity on this particular setup. But if it does break it, I'll let you guys know as well. But you guys can get in now at a smaller position if you want, and then get in later. Yeah, just scale in and add or stack another position on top of it once you get bearish confirmation. All right. So yeah, that's pretty much it for that. Now let's do our top-down analysis. So let me do one pair for the sake of time, because I know you know, we're running kind of slow. As well, let me go back. I forgot to give you guys the target for that. Let's go back to the 10-minute. Yeah, so then as far as target goes, you can, yeah, you can have a TP1 here at 91.96. If you want to really play it safe, just do 9,200, because that's institutional level, which, you know, I think would be wise. Let's do 92. 9203 would be fine. Just take TP1 here because we don't know. This could be respected. TP1 9203, 1.9203, and then, you know, as far as your TP, your final TP, that's, you know, right around here at 1.917, you could say. So let me just do that right now. 92. Okay, 91.70 for the final. All right. Yeah, I know for Oanda the spread is kind of wide for those who they're trading with Oanda. It's about 4 pip spread, which is kind of wide. So just be aware of that. But yeah. All right. So with that said, let's move forward. Let me actually do this as well. Let me add alert here and say TP non-hit. Take partial if you want to. Take partial profit if you want to at TP1. But we'll see. Price still has to break and close above below this level before we know for certain what's really happening. We may have made the wrong decision. If you guys want to, you can close out now. I'm going to keep it on because that's a mistake that I made. But I still think price is going to push lower. But all right. So with that said, let's move to our setup and let's do some top-down analysis. So the first pair we're going to do right now is the Aussie USD. Let's go to the weekly for that one. Weekly, and let's do Aussie USD. AUD USD. All right. All right. So yeah, we're looking at the Aussie USD, and we're currently looking at the weekly time frame for now. And well, yeah, let me just delete this. I don't think we need it. All right. So on the weekly chart of Aussie USD, what we can clearly see here is that price, of course, went down, formed this double bottom on the weekly, this W pattern. You saw this expansion to the upside. Now price is in the middle of a correction. So then there's a possibility that price may correct somewhat to this particular area. We do have this hesitation candle, so then that can act as an area of structure as well. But we do have this area that price appears to be respecting right now. So then if it is respecting this level, then we could see price push to the upside from here. We could see that bullish momentum come in right about now. But this is on the weekly chart. This is a weekly correction or pullback into weekly structure support. So we see that. But if we drop down to a smaller time frame, we may get more clarity on what's going on. Because for all we know, price could end up pushing a little bit deeper, just to get deeper into the zone before we see a push to the upside. But let's see what's going on the daily time frame. We drop down to the daily. What we see right here is that we have this zone right here of support right here. It's pretty obvious. Look left, structurally is closed, but we see that price corrected lower, had this nice impulse leg to the downside, and right at the support we see that stochastics is oversold, and we can expect some type of possible reversal taking place on a smaller time frame. But again, this one right here is kind of tricky because if you look at it, we are testing structure right around here as well. So anything can happen because we're testing this area of structure, and coincides with what we even have in this area right here. So then this one is going to be a little bit tricky now. Is I have sort of like a different stance on it now, seeing that price push strongly to the upside, and it's now testing this area of supply or resistance, daily structure resistance. So then that's something for us to pay attention to. But price could very well break this to the upside. So then let's see what will happen, or let's see how things are looking on the 4-hour chart, because that was the setup that I was looking for. As a matter of fact, I was looking for for price to create 4-hour bottoming, which it did. We see that price was consolidating, and then we got a break to the upside. So then what I was looking for was for a correction right back down into this particular zone or area right here. Let me change the color. I was going to wait for price to correct to this area right here before I look to buy. So in other words, look for price to fall into the zone, correct? Retest all this structure, look left, structure leaves clues. And then from there, look to buy, and we can take partial profit at the highs. And then if price pushes up, then we can, go for an extension. And, that may happen, but there is a lot of weakness in the dollar right now. I believe the dollar may be one of the weakest currencies, or it is the weakest currency for today. And that's the reason why we didn't see a significant pullback. But we still have time. Price could still reach this zone, and what we don't want to do is chase a trade. Remember, we want the trade to come to us. We don't want to chase after trade. So of course, as far as top-down analysis goes, that's what we're looking for. Specifically for today, we're looking for a pullback into this area of structure right here before we look to buy. So then, of course, this is on a 4-hour chart, and we have to wait a while before we get that. So, we'll see. But yeah, so that's pretty much it for Aussie USD. And I guess for now we can call it quits. We can call it quits, or really transition to our next portion. If you guys have any questions about anything, you can ask those questions now. Anything trading related, anything in any market. It could be in stocks, it could be in commodities, it could be on a particular currency pair. Whatever question you have, we're going to give you the opportunity to ask that question. We're going to open the floor. So then, do you guys have any questions? If not, then we can close the meeting out early today, which is fine. It's totally fine. But I hope today was helpful. I hope you guys got something out of today's session. So if you guys have any questions about anything that we're doing, you guys can ask those questions either to us privately or contact us, or we can chat with you. All right. Yeah. Thanks, Joe, for chatting. Yeah, we really appreciate it. We really appreciate everyone who is in attendance on today. And I guess there's not really any questions. So I guess we can close out early for today. I don't really have too much to share on my end, but like we say, before we close every session, remember to always count your blessings, not your pips, and we will definitely see you guys later, or most of you guys definitely later. But again, have a blessed rest of your week. And for those who are part of our private Telegram channel, we're going to make some changes really soon. So we're going to let you guys know. We're going to move things over to a different platform. So then yeah, because of everything that's included with this new platform, we're going to move everything over, or we're moving everything over to Discord. So then, not only do we have the website up, but we also have the content, videos, training, everything will be within that Discord area as well. So okay, yeah, it did break to the upside, that Kiwi USD. So then we may want to look to buy that on a retest. So yeah, that's the reason, that alert. I don't know if you guys just saw that alert on Kiwi USD. So yeah, let me just go right here real quick and show you how to maneuver with that one. I believe it was on the 10-minute chart. Yeah, it broke this area to the upside. So then we want to see a pullback into this zone, and then from there, we'll look to buy. So again, wait for a correction and then look to buy. So all right. Yeah, but yeah, as I was saying, yeah, we moved and shifted everything over.
Yeah.
Or we're doing that now. We're in the process of doing that now. Right. So yeah, we're moving, really we've been really on Discord adding content for like the past week or almost 2 weeks. We've just been adding videos, adding content. A lot of a lot of the video tutorials on the membership site, you'll see within the Discord group. And so then yeah, we're gonna end up shifting everything over. So just be on the lookout for further
messages regarding that.
Yeah,
but
and we may still have the website. We don't know. We'll, as of now, both platforms are available for now. But we're going to let you know when we give you guys the invite to go over and join Discord.
Yeah, the website's going to be up. Like, as far as, we're just going to test this out. If it works well, then as far as the membership features from the website, we may, just, stop from that. But for the most part, the website is still going to be up. You can still log in with your username and password and get all the content up, on the website, because we still haven't uploaded everything to the Discord group, Discord channel. So, yeah, just keep that in mind. But for the meantime, we're gonna wean you guys off slowly from both Telegram channels. I know we really monitor up to 3 channels, but we're gonna wean you guys from that, and we're gonna move everyone over to Discord. But yeah, that's pretty much it.
Yep. All right. So that's pretty much it. Hope you guys have a wonderful rest of your day, and we'll definitely be chatting with you guys soon. So stay blessed, stay encouraged, and have a wonderful rest of your day. All right, talk to you guys later. All right. Okay, then bye.